What's up, guys? William Ryan here. So I'm just going to be managing this position in front of you guys. I know it is a 15-minute position, so this session may take a little bit longer than I would personally like, but I just want you guys to kind of take notes and on how to manage positions. And so I'm in a short position here on GJ, right? And the framework for this setup, right? Very, very simple as always. So the OA framework. Okay, we have time. Okay, so it's currently New York session. Price. So we traded up into that 200 level here. Okay, which is one of the numbers that we look for. Right, and the repeating fractal. Plus the market maker model. Right, if you guys hear anything in the background, I'm currently at my buddy's shop, so it could get a little loud, but we'll see how that goes. So the framework of this trade, right, the PD arrays that we're currently using, balanced price range, FVG, all good, bro. I'm just
move cars in and out.
Yeah, all good, man. I'm live streaming on YouTube right now.
Nice.
Yeah. But yeah, so getting in here, right, looking for price to expand below these lows. Right at this point here, honestly, on this 15-minute candle, I would have much rather to see it close below this balanced price range. That would have been ideal. And so we really don't want price to close above this balanced price range, right? And the reason why I have my stop loss too above this fair value gap, right, and not above the high or even above mean threshold of this gap is solely because if we're looking for a low resistance liquidity run, we want to see these fair value gaps stay open. We don't want to see a complete closure, right? So if price were to come up here and take out this high and even fill in this gap, I'm really no longer interested in the trade because I want to see this high here stay in place, right? And then ultimately see a low resistance liquidity run lower for these lows, right? This candle here, not the best sign, right, as of right now, but we just don't want to see it close above this balanced price range and close above mean threshold of this fair value gap. Notice right now we have all the bodies respecting this balanced price range over here. And again, we're going to have to start moving lower relatively quickly. Definitely don't want to close above these highs in here. Notice, guys, how we're not getting low resistance liquidity run delivery, right? At this point here, after price coming down here to the bottom of this balanced price range and then pumping all the way back up, right? That's indicative that we're on the wrong side, right? We have these equal highs up here, right? If we were going to be on the right side and price were to move lower and we're going to get that low resistance liquidity run signatures that we look for, right? This here is a very, very bad sign. Like here we could start scaling out, right? Because we're probably most likely going to be on the wrong side. Right? So this is how I personally manage trades, right? So just based off the factors that I just explained, right? And the way price is kind of behaving in here, not giving us the low resistance liquidity run signatures that we want to see, right? I will begin to scale out, right? As time goes on and as I'm in the trade, I want to remove my exposure if I'm not getting the delivery that I want to see, right? If you guys follow my channel, you guys know that I do trade a lot of lower time frames. Typically getting like 5 to 8 setups a day. But I just wanted to hop on here to kind of show you guys how I manage my positions, right? And because I get so many setups on a day-to-day basis, I have no problem scaling out when things aren't in my favor, right? But for the most part, I do let my stop loss and my TP do its job, right? So I don't want to get in the way of my trading plan and my initial decision, right? I have to stick with that. I made the decision to go in short, and I have to stick with that. Right? That's what my plan says, but I am able to scale in and scale out, especially when the trade isn't looking so ideal, right? So again, if you guys are watching, take notes. If you're in a position, right, and you're expecting low resistance liquidity to run lower, and you're not getting that, right? So the 4 stages of delivery, we'll go over it very, very quick. So we have consolidation, retracement. Oh, it's okay. Right, so these are the 4 stages of delivery, right? And so if we're expecting an expansion towards the downside, right, and then we begin to consolidate, right, that's indicative of us being on the wrong side, right? This here would be viewed as a market maker sell model, and this could be viewed as the second leg distribution to go lower, right? So when we're looking for that second leg of distribution to move lower, right, we want to see it do so with fast candles, right, and velocity and speed. And so if we don't get that, the longer time goes on and the longer we are in a delivery that we don't want to see or we weren't expecting, right, it's 100% okay to begin to scale out of your trade, right? The first thing that we want to do, right, as traders, first and foremost, is we want to preserve capital. Okay, the second thing we want to do is compound capital. Right? So in this current situation, right, I'm kind of doing both, right? So I'm preserving capital, okay, because I'm not getting the delivery that I want to see. I've scaled out half of my position, right? So if price comes up here and takes me out, which at this point, if we close above this BPR, it probably will, right? Very, very likely that it will. But because I've scaled out and I've lost, I took about half off around break even, right? This allows me to preserve my capital, right? And if I lose less than I'm anticipating on losing, right? To me, that is a huge win. That is not a loss, right? We have our edge. We execute our edge, right? Like in this case here, we have the William percent R, right? The William percent R takes out this high. At the same time, we're failing to take out this high. At the same time, price is in a balanced price range, fair value gap, breaker here, right? So we have a lot of PD arrays formed, and we also have price levels, right? The 200 level here, right, which is one of the levels that we look for. We have a 80 pip retracement into this range. Right? And so my plan was here. Every part of my plan was in this fractal, was in this chart. Right? The only thing that it's not that I don't like it, but I would rather see this William percent R here. I'd rather see it be more in the middle of the range. So the closer to the middle of the range the William percent R is, the better. Right? But going back to preserving capital and compounding capital. Right? If you're not getting this type of delivery, right, the expansion that we want to see, as time goes on, we're probably going to be on the wrong side, right? We want to see immediate reaction. Okay, we don't want to see price hang around in here, right? The longer time spends in here while we're in the position, okay, the lower our chances are of being correct, right? It means we're probably going to be on the wrong side. So then what do? For me personally, in my trading plan, I can change the stop loss and my TP according to how the trade's going. But I can't hop out of the trade here, right? I've already made the decision to get in. All my signatures were here, right? The last thing I want to do is get in my own way, right? So we're just going to let price play out. And as you guys can see here, we're most likely going to get stopped out. But the thing is I'm not worried about getting stopped out. I know I'm going to lose trades. I know I'm going to win trades, right? More times than I'm going to lose. And so this is just a part of the business, right? This is a part of trading. But if I lose less than anticipated, say you risk 1% here, right? On this account, probably risking about 0.5%, roughly, give or take, right? So if I came in here looking to lose potentially, or, risking $500, but here I am, right? Probably only going to lose $250, right? That is a huge win. Okay, you want to keep your losses small, and you want to, obviously have much bigger wins. And so this is just a part of managing trades, and this is one of the ways that I've found to be successful managing trades, right? It really helps out with the psychological side of things as well, right? Because losing less than anticipated is actually a huge, huge win. I think you guys, I think a lot of traders actually struggle with that mindset, because when traders lose, they're like, oh no, like I lost. Like a lot of times, like it stings traders, right? So by doing this, you're actually reducing that sting, and actually over time, it starts to feel like a win. If we stay below the balanced price range here, it'll be pretty impressive. Or if we close back in the balanced price range, we got 20 seconds here. Yeah, so we closed above it, which isn't ideal, right? So obviously, I think we are going to move higher, to be completely honest. Hey, Muzzy, what do you think?
Let me see. You got equal lows below?
Yeah, there's a lot of liquidity below. Had OA signatures here.
There's a lot of liquidity above 2 short-term internal range.
Yeah, for sure. I see well, initially I was looking at a market maker sell model to unfold second leg distribution for these equal lows, right? And then there's also, check out these equal lows too on the daily. I know it's kind of late in the day for Forex, to be honest. I know volatility really starts to slow down around 11, but
yeah, typically.
Hold on.
You trading cable on Jappy?
Yeah, the beast, man. Down here. Right, lots of liquidity down here on the 4 hour. So I was seeing if they wanted to squeeze.
Ooh, 4 hours juicy.
Squeeze the longs, but
yeah.
At this point, right, like.
What's the 4 hour thing again? Let me see the 4 hour.
Yeah, and you have always signatures here, right? Balanced price range.
And if you look left, like it looks like it could be a purge for a possible long lower,
Yeah. I mean, like we also have this signature here. That's also what I was looking at as well with the optimal advance. So you have, right, the 1% R, it comes up, takes out this high here, the respective high, which is here. Right, come up into the fair value gap, balanced price range, and then, looking to move lower. But now that we're back above this range, like on the 1% R, right? We're coming back above the initial high. That is not ideal. That's actually another signature that we're going to be on the wrong side. And you guys are going to notice too, watch, when I get taken out here, if and when I do, it's going to do so with speed, right? Because we're not getting that delivery that we want to see. Expansion lower, right? We're not getting the low resistance liquidity run lower that we're expecting. We're most likely going to get that low resistance liquidity run in the other direction, right? The longer time goes on in here, right, the more likely we're going to be wrong a lot of times. And so if we do come up and take out my stop, it's going to do so with some speed. It's going to do so with a candle like this. And that's completely okay. What are you saying up there? Did you take the bends out for a rip?
Yeah.
Nice.
Yeah, it's a lot better.
Nice.
It's a lot better, but for you. He's probably gonna come pick it up around 6.
Yeah. What's that?
Yeah, cruising today. Now.
Oh yeah, nice, man. Yeah, even here as well, guys, like just based off what's going on, right? They're priming liquidity above the marketplace. Like you could take off another quarter of your position here, right? Because price is not going in my favor. It's not giving me the delivery that I want. And I'm anticipating to lose here, to be honest. So we're going to take off some more, right? Because as time goes on and as price is not giving me the delivery that I want, I'm going to reduce my exposure. Why would I lose more than I need to lose, right? And I know that if I am going to be wrong and we're not getting low resistance liquidity runs lower to the downside, we're going to be getting low resistance liquidity runs to the buy side. Right? Does that make sense? I can't even see the chat, but hold on here. That I need to lose. Right, so we're going to get a big bullish candle here, right? Because we're consolidating in this balanced price range. We didn't get any speed or any closure below. This candle here needed to close below this range for us to be good, right? And because that didn't happen, right, we're most likely going to be on the wrong side. And that's completely okay. We're going to lose trades, but as long as we lose less than anticipated, you're going to really help out your P&L and your P&L curve as a whole.
It's a nice thing about the optimal setup because when you're right,
it gives you immediate. Right. Yeah, you need
very impulsive in the direction that you want it to go. Mm-hmm. So it's kind of obvious that you need to manage the trade when you're seeing
correctly. Yeah, exactly. Right.
You know, that's what's nice about it.
Yeah. 100%.
Other setups you're gonna have like teetering and tottering, right? Like sometimes you're gonna be impulsive, sometimes you're gonna be slow.
Yeah. In situations like this, man, this is a higher time frame. I was like, you know what, this is a good opportunity to go live.
Yeah. And I never see you trade this time frame often.
Yeah, well, never.
You always
never.
like lower time frame.
No. Well, I just popped up the trade, right, for my trade yesterday on I was like, you know what, I'm going to just hop on live and make it a this is very productive though. Like these are the videos and these are like this is the content that traders need, in my opinion. Right? Everyone usually just sees the wins, right? But you guys are about to see me take an L. But in my mind, right, it's not a loss at all. I was initially going to lose $500 on this demo account. But now we're probably only going to lose like $250, $300, right? So I'm cutting my risk in half drastically. Right, so when the trade's not going in my favor, I typically never lose. Probably like 8 out of 10 times, I will not lose as much as I was anticipating on losing.
That's good trade,
right? Which is a huge win.
Yeah, that's good trade, right? It keeps in the game longer.
Oh no, it preserves.
Everyone hits drawdown. Everyone hits losing streaks.
Yeah, literally, it preserves your account.
Yeah.
And like I was saying, like trading on the lower time frames, like typically I wouldn't trade this, right? But everything here is everything here that's in the marketplace right now. Like my plan was there, right? So, not by any means was this a bad entry, right? In my personal opinion, the balanced price range, breaker, there's an order block here, fair value gap. I don't think though if we trade up to this gap, I don't think we're gonna trade lower. And it is Friday. My laptop's about to die. Can you put this over there?
Yeah.
Actually. Right, and we'll pop down to she's about to die. It'll be interesting, right? Like if this 30-minute closes below this BPR, back into the BPR, I mean, it wouldn't be that bad, but at this point, right, as time goes on, probably have like a 15-second setup here. 30-second away. And that's it, right, guys? Like you have to execute your plan when your plan tells you to press the button, and then you just manage accordingly. It's very, very simple, right? Traders complicate everything, right? And that's the last thing we want to do is complicate our trades. You want to make trading easy. You want to be like an algorithm yourself. Mezzy, bro, you should start up a YouTube, man. You should start up a YouTube, man. We'll hop on together.
Yeah, I'm gonna get a little warm.
Gotta get the tires warm, man.
Yeah.
The tires ready. Yeah, I feel that.
I gotta make sure I'm feeding these kids the right stuff.
It's closed above the fair value gap, then it's going maybe to upside. Honestly, just based off of the delivery, right? Understanding the stages of delivery, right? There's only 4 stages of delivery, and if you're not getting that delivery that you're expecting within a certain amount of time, then you're most likely going to be on the wrong side, right? So we're just going to watch this play out, guys, and I think I've managed the trade as best I can, and I'll probably just leave the rest of the position on. EU. Oh, nice, man. 15 pips. Yeah, man, honestly, I don't trade the majors, to be honest. If I trade Forex, this is probably the first time I've traded Forex. Well, actually, I traded last night in Asia, but I typically don't trade the majors, man. Based off my data and my back testing, the crosses offer a lot more opportunities in terms of optimal advance. Surprisingly, but yeah, I don't trade the majors anymore, man. I just look at DXY for sentiment, and that's about it. Not a big fan of euro dollar, to be honest. Euro and pound.
Pound's vicious, man.
Dude, the pound and
Pound's vicious.
pound's been, honestly, that's all I used to trade, Mezzy. Literally all I used to trade was pound.
That's all I did trade, just pound US dollar back then.
Yeah, and now it's no good.
Yeah, it's an animal.
It's no good.
It's an animal.
Right. Do you guys have any questions? If you guys have any questions, put it in the chat. Try and help you guys out as best I can. Black Owl says, bro, I have some doubt. I have some doubt too, my friend.
If you should not doubt any strategy.
Yo, Mezzy, here's your coffee, bro.
Oh, thanks, bro. Shouldn't doubt any strategy. You see losing, doubt the strategy that you only see winning.
Yeah.
The real strategy, if you see it lose.
Yeah, man. Honestly, I doubt this particular setup, sure, but
why aren't you trading futures?
That's a great question.
That's the first problem right there.
Yeah.
I just realized. Why aren't you?
No, I wanted to hop on here to.
But I'm just saying, based off Mezzy's statistics, your future hit rate is
no, exactly.
Is quite high.
100%.
Your futures hit rate is pretty good, buddy.
So why crosses over majors? So last year I did a study in terms of like, okay, where does optimal advance form the most and how frequent? So I did a study over like I believe it was like a 6-month period, and come to find out that the crosses, like EJ and GJ, they have much more opportunity in forms of optimal advance. And yeah, so obviously indices and NASDAQ and the Dow Jones, S&P, they obviously perform the best, and that's kind of the market that you want to be a participant of if you guys are trading optimal advance, right? But if you are still trading Forex, I would highly recommend EJ and GJ, and you can also use SMT externally with those two as well. They move in sync a lot of the times, majority of the time. My bias on NAS. Yeah, so bullish, obviously, right? Dollar's looking very, very bearish at this point, right? Because optimal advanced signatures failed. We have sell side liquidity on the downside. I haven't even checked it, but I wouldn't be surprised if it got taken out today, right? US 30 comes into this balanced price range, order block, fair value gap, and just completely rejects, right? So actually, we'll see here. Might get into some scalps potentially. We'll see. I'm sure the chat would like to see me trade the 5-second chart.
Listen, kid, let me tell you something. If I know the fastest corner is T1 outside, inside, I'm taking T1 outside, inside. You know what I'm saying? No reinventing the wheel.
Yeah. No,
that's one thing that differentiates from me and Alec. One thing I love about Alec, he's always willing to research new setup every week. But me, I would get obsessed with one particular setup.
No, I know. Yeah.
And the only reason why, people like everything, you know the saying like with Bruce Lee? Like, I fear not the man who has trained 10,000 different kicks, but the man who has trained one kick 10,000 times.
Mezzy, get over here and say that again so these people can hear you.
Boys, let me tell you a little piece of advice. You can trade every ICT setup. They are all profitable. What you need to do, just like I was saying to Ryan, Bruce Lee had a saying, I do not fear the man who has trained 10,000 different kicks. I fear the man who has trained one kick 10,000 times. Take one setup, master it, know it inside out, know how it fails, and then you reverse engineer it so you're constantly receiving success.
100%.
But you can't do that if you're trading every single like setup, session, time, day. You gotta be realistic with yourself. Yeah. Trade New York session every single day from this time to this time. Trade the same 2-3 pairs. And that's Mark them out. You know what I'm saying? Have your projections. Yeah. It's a business, guys.
It's a business, exactly.
It's not a game.
It's not a game. We're not here to have. I mean, trading is fun. Don't get me wrong, but that's the thing, guys. Like, if you look at like professional athletes. It's like, okay, so a guy like Kobe Bryant, right, found out, obviously he worked very, very hard, but it's like Kobe Bryant didn't just switch to, find out he was good at, basketball and then start playing ice hockey.
Yeah. Say I want to be the best.
And say I want to be, exactly. And that's what a lot of you guys tend to do. Well, not you specifically, but a lot of ICT traders is they system hop.
It's because I think he's so good and he shows so many.
Yeah,
systems.
exactly, man. 100%.
Analysis paralysis.
100%.
Oh, trade this, trade this, trade this.
100%.
It's true. It's true. I was guilty of that too when we first started, bro. Because we came from a Niall Fuller's training course.
Yeah.
$200 training course. Me and Alec thought, you know what, this is it. Like, you make 2 pips every 5 minutes for the rest of your life and you're rich. We didn't know any real setups. We didn't know how financial markets worked at all.
For
We
sure.
didn't see ICT.
This is beautiful in here.
Oh,
This setup right here is really nice. Yeah, like if you guys study indices, US 100 futures, whatever you guys are trading, CFDs, like you will find at this rate on a 15-second chart, 1-minute chart and lower, to be honest, I'm finding 5 to 8 setups a day. And if you guys were just to do, say if you were to take 6 setups, right? I don't recommend this by any means. I don't recommend this if you're not a fast-paced guy like myself. The lower time frames and taking more setups suits me better than a lot of other people, right? But say I take 6 trades, right? And I'm risking 1% a trade, okay? And my hit rate's 50%, okay? Risking 1% to make 2, right? So I'm going to end up making 3% on the day, right? If I take all 6 of those setups and my hit rate is 50%, I get 3 right and 3 wrong.
That's risk management, so.
That's risk management. It comes down to math.
That's all it is. It's
numbers.
Math. It's numbers, percentages.
And percentages in your discipline, right?
And how do you find that hit rate? By back testing the same setup.
Check out that range.
Of times.
Yeah, exactly. Yeah. 80-point range here, guys, is exactly what we look for. We'll check out this range here. 100-point range retracement. Right? And the ranges, guys, the ranges aren't random by any means. By any means. Right? So sorry guys, just looking at the chat now. EJ and GJ is Euro Jappy and Pound Jappy. Yeah, there you go. Yeah, we can look at NQ. We're just over there. Yeah, I am bullish for sure. Yep. And this is the other thing too, guys. You guys want to get familiar with SMT and the price chart as well, because oftentimes it indicates to us the smart money reversal of a price swing, right? And especially right in this certain example here, right? You have NASDAQ, right, failing to take out this high, right? But you have the Dow Jones taking out that respective high. If you guys look at NAS, right? So this low is getting taken out on the Dow Jones. At the same time, we're dropping into this daily balanced price range, right? Like this right here was a very nice daily setup. Right? I know the William percent R isn't very pronounced here, but yeah, we're looking pretty bullish. Honestly, at this point, guys, I'll look at dollar for you guys very, very quick. This position here, we're about to get stopped out, right? It's completely okay, right? Losing is a part of the game. You guys have to fail. You know, you have to run towards the fire, run towards losing. You know, that's the thing about me, Mezzi, and like the people that we trade with. We're not afraid of losing. We don't care.
With risk management, you don't have to worry.
No, exactly.
Take the L's, learn from them.
Yeah, the L's are actually where you're going to grow the most.
Yeah.
Right? But yeah. So at this point here, guys, if you think about it, we have, I got to take a look at dollar here, but this is going to be, we're going to find out. Okay, so we have SMT on these highs right now, obviously. Right? Obviously, we're probably going to be bullish, but we're nearing the end of the week. I'm going to take a look at dollar here. We're going to get rid of this. right? We're about to get stopped out. Again, guys, if you lose less than you anticipate on losing, and you do that on a consistent basis, right? Even on those, like we were talking about before, the 6 trades that, if we take in a day, right? Those 3 losses on your 50% hit rate, if you're risking 1%, you're probably only going to lose 0.5%. So now you're up 4.5% on the day, right? That's the key, knowing when you're on the wrong side. Obviously, if you guys are trading like micro time frames, like 10 second, 15 second, and stuff like that, it's going to be a lot faster price action, and so you may not have the most time to manage trades. So you got to be on the ball if you guys are trading the lower time frames. Yeah, I think dollars and we just took out some sell side here. Right, we have sell side here as well. I don't think we're going to get there today. It is Friday, right, guys? So we make it a TGIF, right? Because we've been moving lower with speed all week, right? Coming over here on indices. Right? I'm just saying this could be a potential scenario, right? But you have NASDAQ taking out these highs, right? Creating all-time highs again, right? The Dow Jones at this point is failing to take out this high, right? So this is obviously the leader, right? And US 30 or the Dow Jones is the lagger, right? Guys, notice how there's no fair value gap in here, right? There's one right here, but there's no like pronounced fair value gap, right? That's indicative potentially of a low resistance liquidity to run higher, right? But looking at time of day and stuff like that, we could get a pull back into the range. I'll stay on here, guys, till about 10:30, and then we'll call it a session. Yeah. This was a beautiful OA setup here, right? Probably should have traded futures, Mezzy? Yeah.
Never reinvent the wheel, baby.
Yeah. No, 100%.
No, Ryan's really good at trading futures, and that's why I knock him, because he's too good not to be trading futures. You know what? Something like this, when it comes to like
educational purposes for the community,
okay.
Yeah, no, 100%.
Trade everything. You want to push your setup to the extreme. You want to see like in weird circumstances if it's performing, if it's not going to perform. It's nice to not have questions about your setup. That's truly what
absolutely, man. It's super, super important. But I don't really have any more questions to ask per se. Like in terms of the data that I've done, the plan that I've.
Well, you know what? Depending on market circumstances, there's always a question to ask. You know what I mean? It can be argued. Like
the question that I don't have any questions in regards to the framework anymore.
Yeah, exactly.
You know what I mean? There's no guessing in terms of like questions about myself and stuff like that. Looking at myself psychologically. And
yeah.
That's where we all got to keep asking questions and getting better. A lot of times, like ICT traders, man, like we were talking about before, they hop from system to system to system.
Because they're all so good, they don't know which one to stand on.
Yeah, no, exactly. Like there's a plethora of information, right?
It's not the system that's going to be the definition of whether you reach profitability and consistency. It's you mastering yourself to be disciplined with any system.
100%. And by people system hopping, you actually avoid doing the work.
Yeah.
When you're system hopping, you are literally avoiding doing the work on yourself, and the majority of the work comes down to working on your mind, working on yourself. Right? That's where the real work is, and traders, especially ICT traders, they avoid it. Right? By system hopping. That's what I used to do. I used to avoid the battles in my mind, but you got to run into those battles. It's so important. You got to go to war against yourself. And to be completely honest, the William % R and Optimal Advance here as a whole, they really do help with that war that you guys are going through in your mind. We all struggle with something, whether it be fear of missing out, impulsiveness, and things of that nature, right? So the William R really helps you with those psychological barriers, right? It's an extra thing of confluence, right? Along with the ICT concepts, right? It helps you with trade selection, right? It helps you with impulsivity. It helps you with fear of missing out. It helps you with risk management, like you guys just seen, right? Once you understand the 4 stages of delivery, right? The optimal advanced system is a mechanical system designed to remove the discretion that you have in your trading, as well as go to war against those psychological barriers and battles that you have going on in your mind. Right? Very, very important. I need to learn how to change this setting. I don't know what happened, but
So
every time what do I think about the RSI? I don't know. I just use the William R. I don't know what an RSI is.
yeah, I didn't even know what any indicator did until even the 1%. The only reason I even looked at the 1% is because it's in the right hands at the right confirmation signals.
Yeah, 100%.
It's deadly. It can be deadly. You don't pick and choose every time you see the 1% signature and just drop half your account. That's not how it works.
No.
You have to still be selective, still be low hanging fruit, low resistance liquidity run, and use it as an extra confirmation signal.
Yeah, 100%. Well, the William R really helps with timing and pricing elements. That's really what it does.
Yeah.
When you talk about time and price, the William R is going to let you know which time and which price is going to expand. What time smart money is really going to get into the marketplace. Right? Watch, guys. So we have a optimal advanced setup here forming to go short, right? We have SMT on these highs, right? Price is coming up into here. And the only reason why I wouldn't take this trade personally is because we're at all-time highs. I mean, it is a great framework, to be honest. This is the framework that we want to see, but in regards to the day and the sentiment that we have on dollar, right? Optimal advanced signatures, the high gets taken here, right? As the same time price is coming up, takes out the high here, fair value gap, right? Sell side liquidity below, right? You'd want to see low resistance liquidity runs lower, right? Sell side liquidity is here. We have a gap down here. We also have a gap down here as well. Right? Want to see speed and magnitude lower if we're going to be correct. Right? Going back to the stages of delivery, right? What stage of delivery is this? Retracement, right? What stage of delivery do we want to see after the retracement? We want to see expansion. If we don't get that expansion, then we're probably going to be on the wrong side. Right? And the way NASDAQ is moving right now, and indices as a whole, yeah, like I wouldn't mind seeing price come back down into the range here, right? SMT on that higher time frame, right? On the daily currently. But that's the thing with all-time highs, man. You really don't know when price is going to stop. You know what I mean? Like there's no PD array above, you know? Yeah. See price trading into here. Right, and then you could potentially get a 5-minute optimal advanced setup here to go long. Yep, want to see speed and magnitude. I like this gap down here. Really want to see some speed here. Low resistance liquidity run, right? And at this point too, guys, if we did take this trade, obviously we didn't, but if we were to enter here, right, you pretty much would have captured the high of this move. Right now at this point, because the first TP is taken, right, this low just got swept, right? We should be seeing low resistance liquidity runs. They go to and through highs and lows, right? Low resistance liquidity runs take out lows and come back into the range, right? And so we want to see speed and magnitude coming down to this gap, right? You have the range from range high to low. Let's just see how big the range is. 250 pips or points, sorry, to the point. That's probably random. That's probably very random. But yeah, we want to see speed and magnitude moving away from this area. We want to see big candles like this. We also have a fair value gap here, right? So if and when price runs away here, you want to see it do so with speed. Like 1 or 2 candles close below this gap. That would be ideal. Notice how we're getting OA signatures to go long here on NASDAQ, right? But the thing is, where is the fair value gap, guys? Right? In this certain setup here, right? See how the gaps are so small here? I'm not a fan of that. Yes, it is a fair value gap, but I want to see a bigger pronounced gap like this to be a participant of. Right, and look at how deep the retracement is, right? The BPR here is very, very deep within the range, right? That's indicative of a low resistance liquidity run. If we trade this deep into the range, and even if we do start to move higher, it's not going to do so with speed, right? Because low resistance liquidity runs, you want to see these PD arrays get left open, right? Or not completely fill, right? And not trade so deep into the range, right? Some sell side liquidity in here, a little fair value gap. Want to see speed and magnitude here on the Dow Jones. It's just so deep. It's such a deep retracement. Right, we don't want to see deep retracements like this, to be completely honest. We don't want to see that deep of a retracement. Right, and the reason why is when you get such a deep retracement like this, you're most likely going to get OA signatures on a lower time frame to go the opposite direction. Right, like in this case right here. Yeah, that 10-second chart is going to be looking good. See what happens. Yeah, looks really good. Yeah, watch. You're going to get speed and magnitude for these equal lows. That's what I would personally like to see. Speed and magnitude. This is the draw. Where is the Dow Jones? That's the other thing you got to take note of too. Yeah. Mezzy, what are you doing over there, man?
Hey?
You're looking at charts?
Yeah, I'm writing an estimate for this guy at the Mustang.
There's a Stang coming in?
Yeah, he wants me to do an exhaust for him.
An exhaust.
Yeah.
You do exhaust here?
I do everything here.
You can put my exhaust back on, eh?
Good. You still have the muffler?
Yeah,
I have the muffler.
yeah, I do.
Yeah, I can weld it back.
Yeah. Want to see speed, low resistance, right? If you were to get in here, guys, stop would be above here, right? And when price hits this low, what you want to do is, put your stop above this high. So as price is moving in our favor, we definitely want to trail the stop, right? Reduce our exposure as time goes on, right? So we're constantly trying to preserve capital and we're constantly trying to compound capital.
So it's done, son.
Right? And at this point here, you're pretty much looking at a break-even trade. And again, guys, this is the other thing too. We don't want to see price take out a low when we're in an OA setup and we have a draw on liquidity like this, low, and lows, and then come right back into the range. That's not ideal at all. Not ideal.
Just want to see a fly down there.
Yeah, exactly.
No respect.
You want to see speed and magnitude. Yeah. We'll see if this was a nice little setup on Dow on the 30-second.
Yeah, it is actually.
Very, very nice.
Yeah. Dow looks like it's going to fly to the next objective.
Yeah. We're going to see some speed here, guys. Watch.
That's what you this is the kind of setup you want to see.
Volatility injection. It should come in. It's better for BPRs to be in a premium if going long. So if we're looking at BPRs, right, like in this example here, right, you have a fair value gap order block. If we drop down to a lower time frame, there's going to be a BPR on the other side of the curve, right? Or even in the order block as well. Like in this case here, that order block that you would have framed your trade off of, right? This order block here and this gap, William percent R signatures, you have a low getting taken out twice here. You could have went long in here as well. And maybe put the stop below this balanced price range. But price comes back down. You typically want to be entering in balanced price ranges in a discount market if we're going long, right? And you want to look at, I got to fix that. It's annoying.
When you move one, it moves the other?
No, I like that.
You like that?
No, like when I'm just doing the tools.
Oh.
Yeah. It's quite annoying. Right? And again here, guys, right? If you took this short, price comes down, takes out the low, comes back into the range, takes out the low, comes back into the range. That's not a good sign, right? You're not getting the delivery that you want to see, right? We're looking for expansion in the form of a low resistance liquidity to run lower. And when we're not getting that, you have to manage your risk accordingly. You have to be constantly in a state of, I need to preserve my capital. And that doesn't mean take the trade off. That's the last thing that it means.
Yeah.
Right? The setup came, you press the button, and that's it. Right? You have a stop loss and you have a TP, and then as price is delivering, you want to manage accordingly. We're going to have an OA set up here on the 15-second chart for, like this. That was a good short.
Yeah.
That was a good short that we just missed. And again, right, price just hit first TP, so what do? You manage your trade accordingly. As price is moving in your direction or not, you want to be managing your capital, preserving your capital. We want to see big candles here. Again, right, you don't want to see price take out the low and then come back into the range. That's not what we want to see. We want to see a range expansion here. With speed. Lots of it. Big candles are incoming, as I would typically say. Right, you want to see this completely run here.
Yeah.
Within the next couple minutes, you want to see this gap get traded to. Right? And if you look at the range, watch, we're going to look at the range, okay? From this range high to this range low. How many points is that, guys? 100, pretty much 100 points. We're going to see if a low forms here. We want to see continued speed. See how NASDAQ's just consolidating? And it goes to show, guys, right? Like I talked about before, NASDAQ is the leader, the Dow Jones is the laggard. So when you're looking for short opportunities in this current market environment, you're going to want to go short on the Dow Jones rather than NASDAQ, right? Because NASDAQ is the leader to the upside, right? Any retracements back into the range, this isn't going to retrace back into the range as much as Dow, right? Because Dow is the lagger. Right, that's another thing that you guys really got to pay attention to is leaders and laggers in the marketplace. It's really going to help with trade selection, right? And this optimal advanced setup. It's going to help a lot, right? It's another thing that I would I actually haven't seen my GJ order get canceled. I haven't gotten stopped out yet, so I don't know what's going on over there. Oh, I think we did get stopped out. I just didn't see the notification. Yeah. Right? You get speed right through my stop, right? Like we just talked about. Right? That's understanding the types of delivery, right? When you understand the types of delivery that we're looking for, it really, really helps with trade management, guys. Really, really helps, right? And that's a company with the 1% R will be able to manage trades very, very well. And that's ultimately the goal, right? Like you look at all these banks, these hedge funds, they're not trading the way we're trading. No. Not a chance. But the way they manage money is incredible.
Elite.
It's elite, big time. Right? You guys have OA setups here. Notice that? See that? Right? Optimal advance. But again, there's no fair value gap in here. Do you guys notice that? That's important to note too, right? If there's no fair value gap, right? Because we know that intermediate term highs and lows in the marketplace, they form where? They form at fair value gaps. So if you have an optimal advance setup and there is no gap, okay, that's going to be an issue. That's going to be a low probability setup. Even if this does play out, I would expect this range here, this 100-point range, to reject and then potentially start to move higher for a market maker buy model. And then maybe get some buy opportunities in the macro to maybe target this high or even just mean threshold of the range. Hey, Mezzy?
Hey, buddy.
Take a look at this quick.
Yeah, come on.
So notice how we have, right, this optimal advance setup here again, right?
Yeah.
So 1% R is taking out this high here, fair value gap. This is the one that you guys want to trade.
Yeah.
Right? This is not the one that you want to trade. Why? Because, yeah, there is an order block, right? But there's no fair value gap in here that's clean.
Came back into the range too.
This is not the entry that you want to take. Personally, this is like a B setup, right? We only want to be taking A+ setups. And A+ setups, we have that fair value gap, right? So watch, we're going to study this. This is actually going to be a good little study. So we're going to see if this 100-point range, roughly, is going to formulate, 150 pip, 150 point. Pop back out to a 30-second. Yeah, we're going to see if this 150-point range wants to hold. I want price to dive into here. We also have SMT here. Again, US 100 is just a beast.
I know.
NAS sometimes. Honestly, I love these markets, man. They're so clean.
Me too.
Everything about them is just clean.
Futures is different volume for sure.
Notice here, guys, right? The SMT on the 1% R also indicates to us a change in state of delivery when we're in a consolidation. So here, this is a consolidation, right? But when we look at the highs and lows, right, comparing to the 1% R, and in the price chart, right, you have SMT here indicating what? A change in state of delivery, right? Indicating that we're going to be moving higher. What is the range, guys? Is that random? I don't think so. A 35-point range from the low to the high when we have that optimal advanced signature. It's pretty crazy. Hey, Mezzi, probably just completely random.
It should be random.
Yeah, the markets are random, right?
Completely random.
Yeah, I know.
I think we just.
Yeah, I think the ranges are not predetermined at all.
No, man.
They can't be.
They can't.
No.
It's impossible for you.
Like, how big is this range here? Probably 150 points. Yeah. Just shy of 150. That's probably really random. Like, come on, man. Right, and guys, notice this as well. This is actually a huge tip for you guys. Lots of value and insight on this in this live. So this signature here, guys, right? When you have a signature like this, right, where price comes up, creates the William percent R, right, optimal advanced signatures, but there's no fair value gap. This could mean that this last leg here is going to be the last leg before we start to resume higher. And we're going to see if that plays out. Okay, if we completely override this fair value gap, right, obviously we may continue lower. We got to pop back out to a higher time frame. But we're going to keep this 150-point range on and see how this holds up. Roughly 150 points. Notice we have the 800 level down here as well. Note that. We're actually going to look at this range, right, from this high down to the low that we're expecting, 100 points, right? So there, to me, there is a good chance we're going to form a low in this gap, right, and then resume higher because we pop out to a 5-minute, right, like I mentioned before, now we have optimal advanced signatures to go long here, right? And this is what you guys, right, like when you study this fractal over and over and over again, you can kind of start to realize, okay, this is going to be the last leg of distribution back into fair value before we have an optimal advance set up to go long, right? So we're going to see if this gap wants to hold here and we get a low to form in here, right? The only thing that negates that is if we completely close below here with speed and magnitude, which we may get. Mezzi, when do you want to start working on my car?
Let me diagnose this ABS issue on the cruise.
Okay.
And then I'm going to throw yours on the list, and it's probably going to be
nice
for the day. Yeah, once it's on though, it's not going to be able to move for a while.
What, the cruise or my Jetta?
Yeah. So
yeah.
Like, if you have any skates or anything later, let me know.
Yeah, I have a skate at 5.
So it might be better we do it tomorrow then.
You sure?
Yeah, you have a skate tomorrow?
Yeah, in the morning though.
In the morning?
Yeah.
Okay, perfect. So after the morning come, the bay should be empty. Let's do that because your car needs time to dry, bro. Because if you take it outside and go on the highway after,
no good, eh?
Yeah. Like you spent a lot on paint and stuff, you know.
Yeah, for sure. Nice little OA setup here on NASDAQ, right? But again, you want to avoid, right? Yeah, this is a clear short, and the sell side liquidity was very, very clean, right? Lots of orders are here, and we just took it out, right? We may reject from here actually and go higher. But you want to, if we're looking at shorts, right, and we want to be a participant in shorts, right, we want to be in the lagger, right? We have an overall bullish market, right? This is an overall bullish marketplace. So if we are going to participate in shorts, we want to participate in the lagger, right? Because the shorts are going to be more low resistance than the leader. The leader is going to have much more high resistance liquidity runs to the downside, right, than the lagger.
Better take longs on the leader, shorts
Yeah,
on the lagger.
exactly. Yeah. Right, guys? So, key takeaways: study the price delivery. Study price delivery as much as you can, and I understand and identify in terms of power of three how price gets delivered on a day-to-day basis. Right. So there's a couple forms of power of three. Right, in terms of price delivery, and I highly recommend you guys study that often, right, and become a master at that. That's going to help you guys quite a bit. And again, see how we're getting OA setups here, right? OA signatures to potentially go short again, but there's no clearly defined fair value gap. Right? There's no defined fair value gap that we can kind of frame our trade off of. One sec, guys. I'm going to check the chat in a second here. If you guys have any questions about what I've been talking about, put them in now. It's going down. I'm yelling timber. That's hilarious. Guys, if you guys have any questions, ask them now. It'll be a great time. Oh, ay.
I want to suck up Kevin's tea so bad.
Yeah, he'd be pissed. He wouldn't be too happy, would he? Probably not.
Where is the kid?
I don't know, man. I'm surprised he's not here.
I'm probably gonna go check that cruise right now while we're in the cool down.
Yeah, for sure, man. Yeah, no worries, man. I'm only gonna be on here for a little bit. I want to see. This is pretty cool though, Mezzy, right? Like when you understand ranges and price delivery.
Oh yeah. Especially the William percent.
We almost just pressed short. That was almost a mistake.
It can't be worse than fucking me and Alec in our first line.
Yeah.
At like 18, 19. Looking for the asset class he plays the position in.
Nice,
That's how poor we knew.
That's not fun, man.
No, man. That's when you know.
Look at the range, Mezzy. From high to low of this price swing is 165 points. What kind of ranges do we look for here at Optimal Advance? 65.
That's great.
Like these ranges are not random; they're predetermined.
Yeah. No.
They have to be a certain number a majority of times, and they have to form within a certain amount of time, which I'm not touching on.
Good. Go check this out.
Yeah.
Let me know if you need anything, Wade.
All right, bro. Thanks, man.
Yeah, man. Good session.
I'll be up in a sec, man. I'm gonna hop off here in a couple minutes, maybe like 15, 20 minutes. Right? So study the ranges as well with the price delivery, right? Because each price delivery is going to have a certain range, right? Notice how we outlined that whole swing, pretty much, right? From the high down to the low. We had an OA set up here, OA set up here. Right, we know the draw on liquidity is going to be equilibrium, right? A high just got put in place. Here, what happened at this high? We had SMT on the daily chart, right? And so like I mentioned before here too, You had SMT signatures here on the willing percent R. There's no fair value gap. Okay, so what does that mean? That this may be used and utilized as a draw on liquidity when we start the buy model. This is going to be the last leg here. And how much was this range? An OA setup. That's going to be an OA setup on a 10-second chart or 5-second chart, what we're seeing right now. And we're going to get some expansion most likely for these highs, right? This here, when there's no fair value gap, a lot of times, guys, 65 points. This is a long, like just from my eyes, like on a 5-second chart or a 10-second chart. Very, very nice. Those equal highs are going to get taken out. Yep, right. So on a 5-second, right, you have this low. It's so beautiful, man. It just, once you guys learn the willing percent R, look at this setup here on NAS, right? That on the 5-second, beautiful. Look at the divergence on the willing percent R, fair value gap, balanced price range, order block. Very, very nice. Very, very, very nice. We're going to want to see continued prices, right? Moving back into equilibrium of the range. That would be ideal. That would be very, very ideal. We want to see range expansion at this point to take out those equal highs. I think we already did, but so these equal highs here, we want to see them get swept, right? And then, okay, so if we're looking for price now to move higher because we have that 5-minute optimal advance setup, you guys want to see low resistance liquidity runs higher, right? So what do we have here? Right, we have a fair value gap. Okay, if we're going to be moving higher, we want to see this be turned into a balanced price range. Right, we don't want to see price come up here and reject this fair value gap, right? If we're anticipating that buy model to start unfolding, we want to see fair value gaps get traded through and then get utilized on the buy side of the curve. So we want to see speed through this, right? Don't really want to see price come back down into here, if I'm being completely honest. Yes, they've primed liquidity in here, but I would rather see price leave this area and move higher. We're in the macro, or we're about to be in the macro. So we're going to take a look and see what happens. See if I can get a potential good entry here. So look what we have here. Look what's going on. We have an OA set up to go long, right? It has to reject here. Don't want to see it come back down below this area here, like this order block, and this low here, or else price is going to obviously move lower. See the SMT here though, right? Price is taking out the low here. At the same time, we're coming into fair value, right? So it's the same principle we apply. I'm going to go long. Positions, orders, executions, right? Okay, so now you guys are going to watch me manage a trade on a lower time frame. HDMI keeps cutting in and out. It's all right. Okay, want to see speed and magnitude moving higher. Right, this low should be in place, right? So if we trade back below this low, we know that we're most likely going to be trading through here, right? Because we had that 150 pip range, optimal advance set up on the 5-minute chart. So now we want to see expansion to and through this gap, right? And then we want to see it become a balanced price range. right? So at this point here, the way price is moving and with what we're getting, I would prefer to take 25 off here. Okay, so I'm minimalizing my exposure, right? We're not getting the delivery that we want to see, right? Especially on these micro time frames, we want to see price move right away. Right away. We don't want to see price dilly-dally and hang out in this area. And the willing percent R too. You typically don't want to see the willing percent R come back below the low that we're framing the trade-off too many times. I want to see speed and magnitude here. My screen keeps going black. The HDMI is cutting out. It's not good. I want to see speed here, guys. Right? And at this point here, my stop loss, I'm going to put my stop loss, right? I'm going to manage my capital as the trade is progressing, right? So now we should be moving with speed and magnitude, right? So I'm going to put my stop below this low. So as price is moving now in my favor, I'm still trying to preserve capital, right? So at this point here, I kind of want to take some partials. Yeah, I'm going to take some partials here. We're going to take 10 off, right? And then our stop here is going to go to break even. Right? Again, you don't want to see price after it takes out the high that we're anticipating on it taking out. You don't want to see it come back into the range. That is not ideal, right? And so now at this point, right, you have optimal event signatures to go short for NASDAQ, right? So if you can frame a trade on both sides, not high probability. Probabilities are not the greatest. And so my stop is going to go to break even here, right? And it's going to be below this balanced price range, right? This balanced price range, if we're going to be moving higher, right, should hold, right? Balanced price ranges are one of the most powerful PD arrays that we have in the ICT arsenal. And so we wanted to see this hold, which we're currently getting, but we want to see price continue moving higher with speed and magnitude to confirm that 5-minute optimal advance setup, right? If we trade back below this BPR, that is not ideal. And so we want to see speed and magnitude here, guys. We want to see speed, fast, big candles. Don't want to see it reject from here. We want to see price trade with some speed, preferably above this high here, and trade through this balanced price range, right? We don't want to see it reject. We want to see those candles expand to the upside with some speed. Sorry guys, if you guys are putting anything in the chat, just wait till I'm going to wait till this trade is concluded and then I will get back to you guys. Yeah, so this looks like it's going to expand lower for this low. We'll see what ends up happening here. I'm not going to touch this trade. Going to let it either hit my stop loss or this TP. You could take some off here as well. You could partial out for sure. Right? There's nothing wrong with taking partials, right? You're in a fair value gap, right? There's absolutely nothing wrong with taking partials here. Right? But at this point of the trade, right, because I took some off here at roughly around break even after price came back down into this fair value gap, I'm just going to let it either hit my TP or my stop loss, one or the other. Stop loss is going to go below this low. This low should be in place, right, because of this balanced price range. If we come back down below here, I'm okay with getting stopped out. I'm happy with how I managed the trade. Happy with the result. Thank you, bro. I appreciate the feedback. You know, I'm here to help. You know, didn't really. A couple of my students couldn't make it for the live session today, so decided to come on here live. Right. Yeah, man, the William percent art really works well, man. Like, if you watch the whole stream, as a whole, the William percent art really helps with, you know, psychological issues and helps make ICT concepts mechanical, which is what a lot of traders need, right? A lot of ICT traders need. How often will I be doing live streams? I don't know, to be completely honest. Like, you know, my students, like in the paid mentorship, they obviously have my full attention a majority of the week. So, you know, I'll probably be hopping on here when I can, if I have time. But other than that, honestly, I won't be doing this too much. Maybe once every 2 weeks. But yeah, guys, if you guys like this video and this content and this stream, you know, leave a like, comment. You know, I really think this can help a lot of people. And so, if you guys have found this video insightful and you guys find this content insightful, share it to as many traders as you can. I truly believe that it can help a lot of people. And so I just thank you guys for tuning in. I'm about to head off here. I got to go work on my car. So until next time, guys, God bless you, and we'll see you in the next video.